All right, it happened. Geico just announced that they're having a rate increase in Illinois, and it's something that I'm giving a warning out to everybody that this is starting to happen as a trend. This whole channel is going to be uprooted because a lot of these prices that we talked about in the past are going way up. They're actually insurance blog that I read from Business America, and they just announced the dates that Geico has released. They're having a 6% increase. They said from the year before, they're about $103 more that is going to be going up. It seemed a little bit high, but it's the common. We're seeing a video that I'll link it next here that we talked about. Allstate just had a major rate increase as well, to where they're up to 12% increased. A couple of reasons this is happening is the cost of inflation. That's the touted amount that we're talking about, but it's not necessarily the only piece. Before I get into that, I'll give you the juicy details. So this is going to take effect on May 30th of 2022, and I would say that you should expect between a 6 and 9% increase in other states going forward. This is something that Geico is filing with the state. What happens is when you file, sometimes it gets denied. I've seen several companies already have been denied in some states having certain increases. If the state doesn't feel that their current book of business, their customers, can afford that amount or that it's fair for them, they'll just deny it. They'll say that's not a real rule, stamp it as denied, and then it moves on. They've got to reapply. It's not a quick make a phone call and just say this is what we want. It takes months and months for that to process. Hence why they're saying in May 30th is when Geico's is going to go up. So what's causing all of this? You're seeing a lot of things change to where the inflation is the biggest cost, but it's not just general inflation. That's happening everywhere. The cost of food's going up, the cost of everything's going up, the cost of living. It's the cars specifically, the medical specifically. The cost to buy a used car between a few years ago is 30 to 60% more today than it was previously. Part of the reason being is the cost for a new car is about 10 to 12% increased, not as much. So what a lot of people are doing is they're trading in the old cars, getting the new, which is smart. It's a good thing to do. But getting the car is so darn hard because the cost of precious metals and the availability of the metals is causing the manufacturers of the cars to be delayed. Apart from that, the employees, we called this the Great Resignation. There's not as many employees. The unemployment rate has gone up slightly from the year before, and it's causing a lot of issues with that as well. So initially it was because of COVID. Everybody went for work from home. They realized they could still work from home, and a lot of those people didn't return back to the jobs. The pay wasn't as much, and if the pay was better, then the cost of the car went up. So there's just this whole spiral that we're caught up in right now. Part of it's from getting our stimulus. Part of it's from people not going back to work. Companies that are the good companies, the ones that can afford it, are paying more to keep that employee. Other companies can't afford it, so they're going to keep or lose some of their employees. And now the cost to repair a car has gone up. They're overworked. The mechanics, there's just not enough of them. They're charging more for the same labor because they just can't do what they used to do at the same level of income, especially since the cost of their food went up, the cost of their living went up, the cost of their rent for their building for the mechanic shop went up. The cost of parts went up, so now they got to charge more. They lost customers because the shop down the road didn't charge as much because they could afford to absorb some of that cost. And now it's kind of one of those catch-22s. Your smaller guy is just backing out of the industry. They're not repairing cars as much as they used to. A really good example, we mentioned it in the Allstate video, that $100 worth of repairs is costing $300 worth of repairs today. That's labor, parts, the availability. And you may wait 2 weeks to get that car repaired. Think about this. The insurance has to pay for a rental car if you've got the rental car, right? Let's say you got rental car coverage. So commonly, most people are actually too low. It's $30 a day, up to $900 per incident, which is normally about 30 days. If you're smart, you're going to up that because now the cost to rent a car, there's no $30 a day car rentals, at least none that I know of. Anyways, that cost has gone up, so people are probably upping that coverage. There's more claims on that, and now that a part might be delayed an extra 5 days, which isn't horrible for the consumer, but 5 days at $30 a day, every single repair is now $150 just for the rental car more. On top of that, every repair is more expensive. So it makes sense. I don't love it, but you guys need to be aware of this is not just going to be Geico. This is going to be across the board, Progressive, Geico, State Auto, Allstate, Safeco, Liberty Mutual, every company I could think of, State Farm, you name it. I am going to recommend that you guys keep a close eye on this channel if you're wanting to keep up to date with that information. That's going to be something that we're going to cover more and more. I'm going to try to get more of these increases announced to you guys. Maybe I'll make the 1-minute short videos for you. But it's something that you guys want to keep an eye on because it's going to affect you. Here's how a lot of people are going to see this. Well, it didn't hit me. My company loves me, right? They don't. They love you that you're a customer, but it's going to hit you. The reason it hasn't hit you is because you haven't renewed your policy yet. So look at your policy when you started it, the original day, even if it was 12 years ago, that day that you started the policy is your renewal. So if yours was April 1st of 2021, yours is coming up. You should have already gotten your paperwork. It's typically 3 weeks ahead of time. If yours was February 1st, you're not going to see this impact until 6 or 12 months, depending on how long your policy term is. So what are your next steps? How do you combat this? The only real way to do this, because not all companies are being impacted. Some of them are, some of them aren't. More of your larger companies are going to be impacted. We mentioned this in the last video. Your Liberty Mutual owns Safeco. Liberty Mutual owns State Auto. These are big companies, small, medium companies. Allstate owns Esurance. Farmers owns Bristol West, who actually I think is having a rate decrease from what I understand. And so there's like the little guys who have already had kind of medium prices aren't necessarily going to be impacted as much, especially if they're in areas that aren't impacted as much. Some places around the US are not getting hit as heavy with those extra taxes and extra costs. They probably will. But if you're locking in those rates at the right times, now you've got an additional 6 or 12 months that you don't have to wait for that impact to hit you. It's going to make sense because essentially we're going to have to budget everything again. It's my cost for going out to eat, my cost for insurance, my home insurance, who's got the best deal, who's got the best rate, who's got the, what grocery store am I going to go to now? Well, there you have it. Geico has officially started the rate increase. If you haven't seen it already, keep tuned and subscribe for more information like this. The next set of videos that I would recommend that you guys check out, the one that we mentioned is the Allstate having their rate increase. I would check that out if you want some more specific details and percentages. And then we also have the way to shop on your phone if you are in the market and are looking for a way to shop online. Go ahead and check those out. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.